On to Woody's Weekly Wisdom, our first episode for 2024. I think it's episode 43. I should have checked that before I dived in, but let's run with episode 43, and if it happens to be a different number, well, so be it. And look, it's going to be a great year for people when it comes to financial literacy, money management, wealth creation, all those educational topics we're going to cover. And I wanted to start this year's Weekly Wisdoms with a classic example of how relying on the media for your literacy, financial literacy education is maybe not the best idea. And I'm tapping into one of my, pet gripes when it comes to the media, and that is their daily wrap of what's happened in the stock market and attributing some form of blame or reason for the market doing what it's done, only to be completely, made a mockery of the very next day. And sure enough, that's what we've got here. So in today's Australian news, you're waking up to hear that, or you're reading on today's media that US stock markets, or the Bourse as they call it, has retreated because the US Federal Reserve tempered down rate cut expectations. And so if I just scroll into the article, basically what happened in yesterday's trading for the US, so in today's, the excitement about this particular article is the fact that I already know what happened in US markets overnight, and this is what was written after the previous day's trading, and we'll get to what's happened overnight to show you the mockery side of things. But here they are talking about how the 8-day winning streak had been broken, and the market had tumbled from its record highs, and it was weighed down by profit taking because Jerome Powell had come out and said, maybe there wouldn't be a rate cut in March. And so all this profit taking was happening, and the markets tumbled, and even the Aussie dollar lost money, and Wall Street tumbled, traders trimmed their bets, all this emotive language, largest decline in the S&P 500 since September. A lot of emotive language here. Plunged. The Nasdaq plunged 2.2% as the Magnificent Seven stocks fell into the red because of certain companies like Alphabet or Google missing their analyst forecasts. And so all this talk about and blame for what happened in the market on that particular day. And you got US 10-year Treasury yields dived 13 points. So once again, with this article, plunged, dived, tumbled, all this emotive language to give us a fear for what's going on in the stock markets. Even then it says, like, locally, all 11 industry sectors were in the red. Financials worst performing, following warnings from the US and Japanese lenders of their exposure to bad debts in commercial real estate. All this stuff is, all it does is breed this fear of the stock market because of these, emotive language and, this laying of blame for what happened in the stock market, in one particular day. And it really is quite hilarious to watch, because, as I said, the mockery, and so that's the entire article basically, is to say that that there's all these other little pieces of small news on certain stocks, but what they're saying is the market had a crap day, and they use all this emotive language which breeds this fear into people about what's going on in the stock market. And because of all of this, I was interested to see what had happened in markets overnight in the US, because obviously this article was written, late yesterday afternoon or even into the evening in preparation for today's news cycle. And sure enough, open it up to have a look at what happened in the US overnight, and the S&P 500 has recovered every bit of its losses from yesterday and a little bit more. So the articles tomorrow probably won't be about how the markets had a fantastic day. They potentially will ignore that, because that's not as exciting as breeding the fear that they've done with this particular article. And as I always say, so this is not just for today's message, as I always say when it comes to the stock market, it's not about timing the market, it's about time in the market. And this is a classic example of where people trip themselves up and they see articles like this, they panic, they get out, and sure enough, the next day it recovers every bit of the losses and a little bit more. And so, trying to attribute a reason for certain things happening, it might make sense when you hear it and you go, if they're tampering the expectations when it comes to interest rates, then sure, it might make a little bit of sense. But ultimately, the market is going to do what it's going to do. And if you get caught up in what's happening every day, you'll drive yourself to the loony bin. So when it comes to stock investing, the lesson from this week's weekly wisdom is that we become consistent investors over time. And so pick a day of the month, whatever it is, and just invest on that day every month, or take advantage of when the market has these down days. If you've got cash available, or it's maybe it's a day or two ahead of when you would normally invest, or a week ahead of when you normally invest, but you see these markets have a big down day, it's just an opportunity. If you've got cash, basically the market's saying we're on discount today. Snap us up, and away you go. A great lesson to learn is don't listen to the media for your financial guidance when it comes to the stock market, because they're all behind the eight ball to start with, because they're writing about what's happened in the past, and oftentimes, like this article, it comes out and sure enough, the markets overnight in the US have already reversed everything that was in this article. So be mindful of that. And as I said, be a consistent investor. Now, it's the start of the year, and if this is the first time you've watched a weekly wisdom and you're watching on YouTube, click the subscribe button, the little bell up, that should be up above, and that way you'll get notified every time one comes out. If you're watching on Facebook or LinkedIn, leave us a comment, share it with your audience so that they get to hear about it, and hit that like button so that more and more people can see these weekly wisdoms, and we can get better financial literacy education spread across the social media networks. But that's all for this week's episode. I'll see you again next week. We're off and racing for a big year of weekly wisdoms when it comes to the Woody Weekly series. Enjoy. I'll see you again next week. Thanks very much.